Hey everybody, it's Bob, Trade Genius. Got my good friend Phil here with me. Boys, put a fork in it. The Fed is done. Stay tuned. We'll explain how you can profit from this.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Okay, Phil, we talked about this yesterday, and we've been on this theme of transition now for a couple weeks. Little humble bragging here, not so humble bragging. TLT's up 5% since we called the bottom. So for you bond short trolls, you don't make quick 5% in 10 days. But I think that rounded top here on yields is starting to come into 4. I want to throw it back to you because we have some additional graphs from what we showed you yesterday, and also some additional comments. And geopolitically, I think we could put a fork in the yields.
Yeah, so if we look at what Fed's Waller said today, he's one of the governors there on the Fed board. He said financial markets are tightening and will do some of the work for us. He also said the Fed can watch and see what happens on rates. So I think they're starting to get a little dovish on further rate hikes. We've already had one, what they would call skip on the last meeting. We're looking for a second consecutive, skip, if you will call it. I would say it's more like a pause at that point. And the difference between a skip and a pause is a skip means they're going to try to get to that rate goal that they wanted on the Fed funds futures. A pause would mean that they're actually going to possibly stop going after that. So that's why the terminology there is important. If we get a second consecutive meeting, which we're going to have a meeting next month, and they don't raise, that's 2 in a row that they don't raise. I don't think we've ever seen them pause twice and then resume a hike in a hiking regime. So that's probably done. The Fed funds futures are getting weaker. I think they basically are thinking that this is over as well. What the Fed's basically saying here is like, hey, if the bonds get a bid, we don't have to do much here. And we got war. Hezbollah, I guess, is getting involved now this morning on the war. That's going to amplify a bit on bonds, in my opinion. And I think we're starting to see that today. So in terms of like what's happened up to this point, it's all been very textbook. If we look at the 10-year bond yield, this is how they move leading up into a pause. So that vertical line there in the center of the chart is the typical pause you would get. And then this is the action on yields leading up into that. So as you can see, 9 months out, you get a pretty good rally going into that. So if we're on a precipice of a pause here, say it's confirmed next month, everything that we've been seeing so far is pretty textbook. And then as yields fall off, you can see 1 month, 3 month, 5 months from now, we should have yields much, much lower. And I think the macro environment is very favorable for that as bonds get bid. And you can see here, basically what we're seeing now, and actually bonds have topped out here locally. We have a high. So that would imply that we did see the final hike. The other thing here is bond positioning. If you look at the bond positioning, this is Treasury net long positioning, net non-commercial positions. So usually net non-commercial positions are the ones that are going to get it wrong the most. And so you have nobody basically long US Treasuries here. So what do you think is going to happen when everybody's positioned that way? Well, probably have a nice short squeeze. So that'll drive yields further down. So Bob, I think based on all this information, I think that TLT trade's got some legs. I think potentially we could see that thing run up to that resistance level at 94. And I think, falling yields will be supportive of a market until we get the recession trade where it's equities risk off, bonds risk on, and then no longer are we going to have that correlation with yields and the market, right? It's going to be falling yields, falling market versus the opposite that's been happening.
Yeah, Phil, I totally agree. And, we'll probably get some euphoria as we normally do. And then once that euphoria dissipates and people realize there's a reason why the bonds our yields are falling. But what people really don't realize is that money is going to be sucking out of the stock market to support the bond market. So it's really more than just a fear trade. This is by design, by the government to fund the government. And one thing that they like more than anything else, even more than war, they make sure their government is well financed. And I think that's going to be a priority of the government. Look, they'll sacrifice the stock market for the bond market any day of the week. So
Absolutely.
that's all I got, Phil. I think this is, we've been waiting for this for a while. And remember, election season's coming up too. And they're going to want to make sure they can slather the dough around and without interruption. So
Right.
I think our trade's setting up here for a longer term move.
Yeah. So guys, if you want, you can put, let's say, a chart of TLT and you can overlay a chart of the SPX and watch as they diverge, where we would see TLT start rising and the SPX falling. You can look at that on a weekly basis. If you get a couple consecutive weeks where one TLT is rising and the other one is falling, then you probably have confirmation that the recession trade is on, and then you're going to get a much longer trend move on TLT. So there you go, guys. Let us know your thoughts on that. As always, please hit like and subscribe. We thank you for the views, and check out our stuff over at tradegenius.co. We'd love to see you in the room as well, and we'll see you on the next video. Take care.
Trade Genius.